Hello, this is Japanese Economic Review Channel. Today we analyze Japan's June 2026 Consumer Price Index. The data reveals a fascinating divergence. While energy costs drove headline inflation up, underlying domestic price pressures are actually showing signs of cooling. Let's dive into the details of these opposing forces. Headline CPI rose to 1.7% year-on-year, up 0.2 points from May. However, core CPI is at 1.6%, and core remains at 1.7%. This divergence is key. Energy, specifically gasoline, almost entirely fueled this headline acceleration. Meanwhile, core domestic drivers like food and telecommunications exerted significant cooling pressure, suggesting a softening in domestic consumption. To understand this divergence, let's look at the main indices. Headline covers all items. Core excludes volatile fresh food, and core further removes energy to reveal true demand-driven momentum. While headline and core accelerated, core actually decelerated by 0.1 points from May, highlighting that underlying inflation is gradually losing steam. This tree map shows the weight of each category. Food and housing make up nearly half the index. However, their relative stability was overshadowed by the highly volatile energy sector. Despite having only a 7.1% weight, energy dictated the entirety of June's headline acceleration, demonstrating its outsized impact on the overall inflation narrative. This waterfall chart clearly illustrates the month-over-month shift. Energy was the dominant upward force, adding 0.20 points to the headline rate. Conversely, structural cooling in domestic goods and services pulled the index down. Food excluding fresh food subtracted 0.09 points, and communications reduced it by 0.08 points. It's a tug-of-war in the market. While food remains the largest absolute contributor to baseline inflation, adding 0.78 points, we must note the structural drags. Education saw a 6.0% year-on-year drop, providing a significant downward anchor. Additionally, despite the monthly rise, energy subsidies still kept the overall energy contribution slightly negative year-on-year. Let's focus on the energy paradox. The sharp upward swing is heavily distorted by gasoline. The tapering of government provisional gasoline tax cuts created a mechanical lift, contributing 0.14 points to the change. This represents policy normalization, not a sudden surge in raw energy demand. Government interventions are crucial to understanding these figures. Stripping away the headline noise of energy policies, the quote signal reveals a challenging domestic environment. Both food, excluding fresh food, and mobile communications show declining contribution trends. This indicates that companies are finding it increasingly difficult to pass on further price hikes to consumers, reflecting weaker domestic purchasing power. Looking at the 2026 trajectory compared to 2025, we see indices tracking tightly through Q1. However, a mid-year divergence is now evident. Energy-inclusive metrics, headline and core, are ticking upward. In contrast, the core index is stabilizing and even trending slightly downward, reinforcing the narrative of cooling underlying domestic inflation. This heat map places current inflation in historical context. Compared to the severe deflation of the 2000s and the oil shocks of the 1970s, the current 1.7% reading represents a moderation from the 2023 to 2025 post-pandemic surge. Japan has comfortably left the deflationary floor and appears to be returning to an era of normalized moderate price pressures. Finally, a critical note for your models. The next data release on August 21st will introduce a major change: the transition from a 2020 base year to a 2025 base year. Analysts must anticipate structural adjustments to index weights and historical rebasing in Q3 models. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.